Good morning and welcome to our September program. This program is prepared by Club Finance Genève with the collaboration of Dukascopy TV. My name is André Vinès and I am delighted to introduce you today Mr. Lo Niglio, managing partner of Centurio company. Today we are going to talk about Forex exchange. Good morning, Silvio.
Good morning, André.
So could you briefly explain us what is the Forex exchange market?
Okay, the Forex market is an over-the-counter market, a decentralized and completely housed electronically market. It involves always two currencies. While one currency is sold, the other one is purchased, and vice versa. According to the Bank for International Settlement, the size of the market reached an average daily turnover of 5.3 trillion USD. If compared to the New York Stock Exchange, we would need 30 trading days to reach the volume of one trading day on the FX market.
So what is the advantage to invest in such market compared to the traditional stock market?
Well, there are so many. I'll give you a few major ones. Costs are low. There is a low level of investment. If combined, it means that with a few $100, you could enter the market. You need $1,000 if you want to benefit from a money manager, professional one. A third one, there is a high level of liquidity. To make it short, you can buy and sell whenever you decide it. You will always find a buyer or a seller as a counterpart. A fourth, I would say that the capacity of generating profits on that market are never affected, quite never affected by events such as companies' bankruptcies, oil or subprime crisis, or still interest rate crashes like in 1987. At last, I would say that for Swiss residents, the taxation is very favorable. Two examples: there is no taxation on gains, and you're not going to pay any federal stamp taxes, as in the stock market, for instance.
So what the investor generally look for, or what is their profile when they want, why they are attracted by this kind of market?
Simplistically speaking, they look for actively boosting their assets. From a professional viewpoint, we refer to the alpha, which is a risk-adjusted measure of the return on investment. But the Forex is addressing another point, the Forex market, another debate, which is the question of the capital yields against the returns to work. By offering the opportunity to a majority of investors to invest their money on that market, it means that those little savers, investors, can benefit from the capital yields and not only to return to works.
Right. So are you telling us that there is only advantage to invest in such market?
No, this must be clear. This market is risky. If we refer to the broker statistics, 90 to 95% of the retail traders just lose their money. So it is absolutely key that you know and are aware of what you do before to do it. From a professional viewpoint, it means that we go through personal analysis in order to assess the personal needs versus the wish of the investors and their profiles. Once you went and you took successfully this process and you are compliant, then yes, I wouldn't say that you absolutely need to invest in that market part of your wealth.
Yeah, because we understand if we invest in the traditional stock exchange, if we buy stocks of the company, we know the company, there is a plan, there is a strategy behind. It's clear when we invest in the Forex exchange, it looks to be a little bit virtual or intangible.
I understand your concern. Legally, when you buy a stock, you are owner of the company. But from the risk viewpoint, it means that you take both macroeconomic risks and microeconomic risks. Think about Enron's shareholders. They were owner of the company, but this couldn't avoid them to just see their savings and their pension evaporating. When you invest in currencies, you bet on the performance of a whole economy or an economic area. It means that maybe in that area you will have one or several companies that faces troubles, such as risk of bankruptcy. But the other 1,000 companies that are there in that area will support the GDP. So your investment will not be just evaporated because of that. It also means that there is, from that perspective, it means that there is dilution, an effect of risk dilution.
Yeah, it's more macro, as you said correctly, it's more macroeconomic approach, so risks are diluted. And what kind of performance we can expect when we invest in such market?
According to the track record published in the industry, it is not rare that rates of returns are made of 2 numbers before the comma.
Good, which is not bad. And are you able to predict the moves of the market?
Well, no, I'm afraid I have no crystal ball. Our positions are based on a trading plan that encompasses basically 3 major elements, which are the fundamental analysis, the technical analysis, and then the market sentiment. It also determines some other parameters, such as the profit-risk ratio, the size of the lot, the strategy with the different scenarios that can happen, and some others, such as the volatility tolerance. Of course, we do all that job before entering a trade, because once the position is opened, we just want to limit ourselves to monitor the market moves without being emotionally involved.
Okay, so do you think it's the right moment to invest in the Forex exchange market today, and why?
More than ever. Let me list a few elements. Growth in the world is slowing down. According to the IMF forecasts, we went from 3.7 at the beginning of the year to 3.4% now. The spread between the long and short interest rates in the Eurozone, for instance, are decreasing, which is not going to help. The third element, I would say, is that as a consequence, the interest rates, the key interest rates of central banks are very historically low. In Switzerland, as a consequence of the legal measure taken by the authorities and targeting the real estate market, prices are stabilized in some areas and even lowered in some others. And there is a tense geopolitical context, if you think about Ukrainian conflict and/or the Middle East context. So in consideration of those elements, if you want to boost your wealth, what option are you left with? I see basically 2 cases. First, you are a qualified investor or a professional having at your disposal several millions or at least 100,000 of Swiss francs to invest. And then you have a full range of products, such as structured products, alternative investment, synthetic bonds, and so on. But if you're not, the Forex market is the alternative, as it aims at the same high rates of return on that aspect. And if you don't want to cope, if as an investor you don't want to deal with over complex products, or you're just tired and to being served with low levels of interest rate on saving accounts, then this makes sense because it's real added value and value for money.
Okay, I think we all understood all the advantage of this market. So thank you, Silvio, for all this explanation. I presume that people who are interested, they can contact you through your website at the Centurio company.
They're all very welcome.
Thank you, Silvio. So it's the end of the program. We invite you to join us next month. Bye for now.